All right, so it is currently February 3rd. My account is at $10,717, so we're gonna do a walkthrough of the portfolio just like we do all the time. Let's go ahead and set this camera down right here. We'll back up in the frame. So if you're new here, my name's Forrest. I invest in stuff. My passion, my purpose, the reason that I started this channel is to convince as many of you to start investing. So what do I do here? I invest $60 every single day into this account in Robinhood. I started this in August of 2024. So we're, or not August, I started this in April 2024. So we're coming up on the 1-year anniversary of this. Trump announced some tariffs, which knocked the market down. And in this video, I'm gonna explain why market downturns are actually a good time to buy in the long term. Now, I am a day trader, so as a day trader, it really doesn't matter for day trading either, but for long-term investors, a lot of people go into a panic sell mode. You don't wanna go into panic sell mode. This is the best time to buy. So let's go ahead, take a seat down in this comfy chair and talk about the portfolio.
All right, do we wanna chill or do we wanna live? I don't wanna live chilly. I wanna chill live.
So, $10,713, $321 of buying power. I actually haven't bought any stocks today, so this is the perfect time to do this. So what I'm gonna do, and now that the market is down, let's go ahead and look at VOO and see what happened over the last day. So we see over the last day that the market went down quite a bit. I can actually open up TradingView, which I usually don't do in these videos, but we'll take a look at SPX. So this is the S&P 500, the thing that we're investing in. And we see that we're down quite a bit on the day, okay? This is a basket of stocks. So our basket of stocks is down on the day. And a lot of people panic because the value of their portfolio, especially if you have a big portfolio, you've been investing for a while, right? You're losing money, okay? So what you need to realize is this is the time to buy. You wanna buy things when they're on sale. You have to have this on sale mentality. You wanna buy things if they're on sale if you're a long-term investor. If you don't believe in the future of the economy or of America and for the long term, then don't invest, do something else. But this is what this is all about, okay? So the market is down overall. So let's go ahead and go back to Robinhood. And I'm going to buy some shares of this now that they're on sale. You can see that today's return, I'm down 51 bucks on the day, but we're gonna buy $60 more of this right now. So this is really, really important to do because of the chart. So let's go ahead and look at this chart and let's go back and let's actually look at VOO instead. Okay, VOO on the 1 day is down and we're gonna go to the 1 week chart of VOO. So this is the weekly chart of VOO. So imagine if we go to this point in time, the VOO right here, the market was at $518 and it went all the way down to 468. This 468 level. And what you have to realize, guys, is that this is the best time to buy. Now, whether you bought here at, let's do a little arrow, okay? Flip this thing around. Whether you bought here at this high, or if you bought here at this low, you're both up. But the power of dollar cost averaging, I'll put the definition on screen right now. Power of dollar cost averaging is that you always get the best price. So on these dips, when everyone's freaking out and they think that the world's gonna end, just like this dip back here, okay? Right, let's move our arrow over. This dip back here, okay? Or this dip back here, okay? These are always the best buying opportunities because you're getting the best price, okay? And so long as you think that we're not gonna get invaded by aliens, you're getting the best returns. So your gains from here, okay, from 470 up to 561 versus 517 to 561, you're both green, but when dollar cost average, you always get those really good prices. And that's so, so important to do over the long term. That's how you capture and really get that explosive growth. That's how you capture, say, when you have breakout companies that are carrying the market like NVIDIA. If you're not buying NVIDIA when it's cheap and you're only buying it when it's expensive, you're not winning. You're actually losing. And that's what a lot of you guys do. You wait for things to hit the highest price ever, right? And you start buying up here and then you immediately sell once there's a dip. So stop doing that. Anyways, let's take a look at the portfolio. Okay, went through that little explanation. $10,718.26. I just spent $60, so I have $261 of buying power. It's Monday at the moment. My Rivian $40 calls are down. Everything's really kind of down today. But I still have AMD, Apple, VOO, Tesla, Amazon, Palantir, Cost, Nvidia, Microsoft, Procter & Gamble, Berkshire. Let's actually get rid of some of this stuff that I don't need, right? So MSTR, we're gonna go ahead and sell out of this. My total return, actually we'll leave MSTR. That's one of the ones I wanna leave. KMI, let's sell this. Let's just sell all of it, $71, don't need it. I think we're gonna get rid of everything that isn't MSTR. SoFi, I kind of like SoFi. All right, I'm lying. Target, do not like Target, just retail. Don't need that, we'll get rid of that. And we're gonna rebalance all of this into VOO is exactly what we're gonna do. So JP Morgan Active Growth, whatever the heck this is, we're gonna sell all of this, okay? The other really important thing about buying these dips is, and this is why investing in the S&P 500 is so important, is there are things like, there are people out there selling things like insurance, things that have a fixed return of 8%. The problem with fixed return products is that if you buy those dips, you're doing like 30%, 40% on your money in those years. Let's actually do the math. So let me finish selling all this stuff. Actually, no, I'm gonna do this right now. I'm gonna show you guys why these fixed return products are so bad, okay? Because I see people talking about them. So what's the difference from if I bought at 470, okay, and then up to 561? Okay, if you're bad at math, I'll show you how to do the math. So we're gonna do 561 minus 470. It's a $91 gain divided by 470. Okay, that's a 19.3% return, dude, times 100. It's a 19% return on every dollar you invested at that price, at the dip. Right now, when I do the math, I always show you guys an 8% annualized return. So you're getting 20%, over twice of the normal return when you're buying the dips. It's so much money that you're making on these dips, guys. So, you know, these conservative, super safe products that give a fixed return will perform worse than the market in the long term, which is why nobody uses them for wealth creation. They're really just about wealth preservation, right? And, you know, unless you're like super old, you don't need to be a scaredy cat like that. All right, we'll keep TSM, RTX, we'll get rid of, so all of this, boom, boom, done. Humana, we're gonna get rid of this, boom, boom, boom. And you can see that even though the market's down, because I've been doing this for over a year, I'm still green on like a lot of these positions on the total return. Okay, the total return here, like total return here, that's $1.58. Not a lot, but you know, still not bad. Now, one thing you have to realize is that I will have to pay taxes on these transactions. Okay, so when I file this year, because I am selling these things, I am going to have to pay short-term capital gains because my holding period is less than a year, but that's fine. This is not a real portfolio, so I don't really care. Okay, hit the buy button. I can't trade. Sell all, got $44 of that, get that out of here, boom, bam, and got P&G, Procter & Gamble. Dude, I have a lot of crap in here. This is all stuff that like my Discord told me to buy, and you know, I love these guys, but they did not make the right choices. ProShares, Ultra, QQQ. All right, let's get rid of this. Sell all this. I want this to be about as bare bones as possible. Costco, let's get rid of this. We're selling everything except for a few. Okay, Costco, really simplify this thing. Amazon, get that out of here. Sell all of this, 65 bucks. So we're gonna have a lot of money to reinvest here in this video, which is pretty cool. Let's get rid of Palantir. How's Palantir doing? What's my total position? I'm up 200 bucks. I'm actually gonna keep Palantir. I like that. I don't mind having an outsized position in that. Tesla, I'm gonna get rid of Tesla. Get rid of the old Tessie on principle on that one. I still have Tesla and VOO, so I don't need to double dip too much on that. Apple, get rid of our Apple shares. Heavily weighted in VOO already. Don't need a double dip on that one. And AMD, classic AMD, down $111. Let's get rid of AMD there. All right. Lock in those gains and losses. So I have $1,355 of buying power. So I'm gonna hold off on reinvesting this just yet. Actually, no, we'll do it right now. Let's do it right now. So I had $260 and I have how much buying power? 1,355. So let's do a calculator. Okay, so 1,355 minus 260, 1,095. So let's put $1,095 into VO right now. Trade, buy 1,095 into VOO, and we've locked it in. That's more than I thought it was gonna be, honestly. Cool, so that money's reinvested. That's really it for this video, just a classic, another portfolio breakdown. We're gonna do our $60 every day, so that was a nice little rebalance there. Have a very much more simplified portfolio here. Buying power for the week, 260, so we're gonna do $60 every day. Yeah, that is it. Start investing. If you've started investing because of my videos, please let me know down below. Please subscribe, share this with as many people as you know, okay? I wanna start a revolution of people in investing and taking control of their financial futures. Oh, my back was starting to hurt. See you in the next one, peace.
I'm never gonna look back, 'cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change, slowly take a step today.